What if I told you that Wall Street's secret weapon isn't some Harvard MBA with a fancy spreadsheet? It's an algorithm that never sleeps, never asks for a bonus, and makes decisions faster than you can say market volatility. Welcome to the financial revolution, where AI isn't just changing the game, it's rewriting the rulebook. Today we're breaking down the 10 AI applications in finance that are making traditional bankers sweat and progressive CFOs look like absolute geniuses. Whether you're a fintech newbie still reconciling your personal checking account or a seasoned quant who dreams in algorithms, you're about to discover how AI is transforming everything from fraud detection to trading strategies. We'll cut through the jargon, show you real implementations that are crushing it right now, and give you actionable insights you can drop in your next meeting to sound like the smartest person in the room. Buckle up, your financial future is about to get an upgrade. Remember when your credit card got declined while buying coffee, but somehow missed the suspicious $500 charge from a discount electronics store in another country? Yeah, that fraud detection system needed an IQ boost. AI has transformed fraud detection from reactive damage control to proactive threat hunting. Instead of using rigid rules that criminals crack faster than your office Wi-Fi password, machine learning analyzes thousands of data points in milliseconds to spot suspicious patterns. JPMorgan Chase implemented AI fraud detection and prevented over $2 billion in potential fraud last year alone. The system doesn't just look at where you're spending, but recognizes your unique patterns. It knows that yes, you really do order takeout 3 times on Tuesdays, but no, you don't suddenly buy luxury watches at 3 a.m. Stat alert: financial institutions using AI for fraud detection have reduced false positives by up to 80%, meaning your card stops working less often when you're actually traveling. While human traders are busy checking Twitter and arguing about lunch spots, AI trading algorithms are analyzing news sentiment, processing satellite images of retail parking lots, and executing thousands of trades per second. These aren't your dad's trading algorithms either. We've graduated from simple if-then statements to sophisticated machine learning systems that adapt in real time to market conditions. Renaissance Technologies, the hedge fund that basically prints money, uses AI to spot market inefficiencies humans can't see, patterns across thousands of securities that only become visible when you're processing petabytes of data. Hot take: the best human traders of the future won't be trying to outsmart AI. They'll be the ones who best know how to collaborate with it. The man versus machine narrative is so 2010. We're firmly in the human plus AI era now. Remember when getting a loan meant paperwork, anxiety, and a loan officer who seemed to derive joy from making you sweat? AI is changing that financial walk of shame into something that happens faster than your DoorDash delivery. Traditional credit scoring is like judging a book by looking at only its cover and maybe the first page. AI credit scoring reads the whole library of your financial life, including factors traditional models miss. Upstart, an AI lending platform, approves 27% more applicants than traditional models with 16% lower interest rates because it considers education, employment history, and thousands of other variables beyond just your FICO score. Real talk: the traditional credit system was biased against people without standard credit histories. AI can actually reduce lending discrimination by finding creditworthy borrowers traditional systems overlook, though only if it's designed to avoid encoding existing biases. Bank customer service used to be where hope went to die, trapped in hold music purgatory until you eventually gave up or took out your frustration on some poor call center rep named Dave. Today's financial chatbots aren't the annoying computer says no obstacles of the past. They're using natural language processing to understand your angry typos at 1 a.m. when you can't figure out why your transfer hasn't cleared yet. Bank of America's virtual assistant Erica has helped over 32 million customers with everything from transaction disputes to budgeting advice, handling over 1 billion interactions since launch. Pro tip: the best bank chatbots actually understand when they're out of their depth and need to call in human reinforcements. When evaluating your bank's AI assistant, check whether it knows its own limitations. That's the mark of truly smart AI. Traditional risk models were about as useful for predicting the 2008 financial crisis as a magic 8-ball. They relied on historical data and assumed markets behave rationally. Two assumptions that age about as well as milk in summer. AI risk systems don't just look backward, they run thousands of simulations to stress test portfolios against scenarios humans might not even imagine. They're constantly recalibrating based on new data, catching emerging risks before they become catastrophes. Goldman Sachs uses machine learning to run risk simulations that would take traditional systems days to complete in just minutes, analyzing millions of market scenarios to identify hidden vulnerabilities. Fun fact: some risk AI systems now incorporate sentiment analysis of earnings calls. They're literally measuring how nervous executives sound when answering analyst questions to detect potential troubles before they show up in the numbers. Remember when personalized banking meant your local teller knew your name? Well, today's AI-powered personalization makes that look like the financial equivalent of a flip phone. AI doesn't just know your transaction history, it understands your financial behavior better than you do, predicting cash flow issues before they happen and offering solutions tailored specifically to your spending patterns. For instance, Royal Bank of Canada's Know Me Insights analyzes customer transactions to provide personalized insights like, you spent $127 more on groceries than usual, and automatically squirrels away money when your spending habits indicate you can afford it. Here's a stat alert. Customers receiving AI personalized financial advice are 5 times more likely to act on savings recommendations and 7.2 times more likely to open additional products with their bank. Money laundering compliance used to be where banks sent their most detail-oriented employees to manually review suspicious activities, like looking for a needle in a haystack while blindfolded. AI anti-money laundering systems don't just look for predefined patterns, they detect anomalies you didn't even know to look for, connecting dots across thousands of accounts and transactions to identify sophisticated laundering networks. HSBC implemented AI for AML and reduced investigation costs by 20%, while increasing suspicious activity detection by 22%. It's the financial crime equivalent of becoming both cheaper and better at your job. Real talk. The criminals are using AI too. The financial institutions winning the AML battle aren't just using better technology. They're constantly training their AI on new money laundering techniques as they emerge. Insurance claims were the DMV of finance, a soul-crushing bureaucratic process seemingly designed to make you question your life choices and possibly your will to live. But AI claims processing is changing that from weeks of paperwork to minutes of smartphone photos. Computer vision can assess vehicle damage from images, natural language processing can extract information from medical reports, and machine learning can detect potential fraud without delaying legitimate claims. Lemonade, the insurance startup, set a world record by paying a claim in 3 seconds flat. Their AI reviewed the claim, ran 18 anti-fraud algorithms, and approved payment before you could even finish your on-hold coffee. Pro tip: the best AI claim systems don't just process faster, they're more accurate and fair. Look for insurers transparent about their AI decision-making process, not those using black box algorithms as an excuse to deny claims. Financial contracts used to require armies of lawyers and analysts to review, a process about as efficient as transcribing War and Peace by hand while wearing mittens. AI document analysis can review thousands of contracts in hours instead of months, extracting key terms, identifying inconsistencies, and flagging potential compliance issues faster than your lawyer can say billable hours. JP Morgan's contract intelligence platform reviews commercial loan agreements in seconds that previously took 360,000 hours of lawyer time annually, freeing up their attorneys to do something more valuable than glorified copy-pasting. Fun fact: during the LIBOR transition, banks used AI to review millions of contracts to identify those referencing the outdated rate, a task that would have been virtually impossible to complete by the deadline using human reviewers alone. Traditional financial forecasting was like predicting the weather with a barometer and a wet finger in the air, marginally better than guessing, but not by much. AI forecasting doesn't just extrapolate trends, it identifies complex relationships between seemingly unrelated variables, incorporates alternative data like satellite imagery and social sentiment, and constantly updates predictions as new information arrives. Norwegian pension fund manager KLP uses machine learning to forecast market movements that incorporate everything from traditional metrics to climate data and political stability indices, creating a competitive edge that traditional models can't match. Hot take: the COVID-19 pandemic exposed the limitations of human forecasting. The institutions that navigated it best weren't the ones with the most experienced analysts, but those with flexible AI systems that could rapidly incorporate unprecedented scenarios. So there's your financial AI arsenal. Systems that detect fraud like a suspicious parent trade faster than your coffee order, assess creditworthiness beyond your FICO score, provide customer service that doesn't make you want to throw your phone, manage risk before it manages you, personalized banking like a mind-reading financial advisor, catch money launderers without drowning in paperwork, process insurance claims while you're still taking photos of the damage, analyze contracts faster than a law firm on deadline, and forecast financials with scary accuracy. The common thread: they all make finance more efficient, more accurate, and surprisingly, more human. Because when AI handles the mundane tasks, financial professionals can focus on what humans do best: building relationships, making complex judgments, and creating innovative solutions. Which of these 10 AI financial applications would be a game changer in your business right now? Drop it in the comments and I'll slide you some specific implementation recommendations and tools to check out. Real talk: the finance industry is splitting into two camps, those embracing AI and those about to be outperformed by it. The gap between these groups grows wider every quarter. Hit subscribe if you're into future-proofing your financial career.